What's going on, everybody? Hope you're all doing well. As you can see, we finally have this podcast room finished, and so we are now coming on to the very first episode of it. Super excited for this. The name of the podcast is going to be Real Estate Truce. It is kind of hard to say, but I already have a brand built around this, and really I couldn't think of anything else. So we're just going to kind of roll with it, see how it goes, and then just go from there. So kind of wanted to talk about what this podcast is going to be about. Obviously, mostly it's going to be regarding real estate and mortgages. But I also wanted to say that it's not just going to focus on that. I'm going to really try to branch out to as many different industries as I can, interview as many different people as I can. And so we can all kind of learn together about some different industries, different things that people are doing in today's world. So if you're interested in coming on here, kind of want to get your name out there, your brand out there, no matter what it is, I would love to have you on, ask you some questions, and kind of get some better insight on it, what it is that you do. Um, you guys can go follow us at YouTube, Spotify. We'll be on all social media platforms. Like I said, the podcast name is Real Estate Truce. I'll have the link to the YouTube and full video in the description. And yeah, today's guest that we have for the very first one is a pretty interesting and special one. We have Aaron Taravella. He works at Synergy One Lending. They are a new mortgage company here in the Baton Rouge area. He has been in the business since 2010, and he has been on the Scotsman guide as a national award winner for top loans closed since 2018. So super impressive. He's going to go into a few different things for us that we will all be able to learn from. And so he has some really good information to give us. And then without further ado, let's get into it. You guys like, subscribe, share with a friend, and then I'll see you all in the next one. I don't even have a name for it, really, yet, I guess. Well, welcome everyone to the really our first episode of the podcast. Today we have a special one. I'm sitting down with Aaron Taravella, mortgage veteran after an award-winning nationwide, right? Nationwide.
Yeah. So I've been on the Scotsman guide list for most closed loans since 2018. We've seen some pretty interesting years
Yeah.
since then with old COVID and all of that stuff there, and I'm sure we'll probably get into a little bit of that later on. But so been on the Scotsman guide since 2018. So,
Yeah.
Yep.
That's super impressive, especially because you didn't have a lot of that time. You didn't have a big team with you, right? It was really just you.
Yeah. So starting in the beginning years, and I've been doing this, solely mortgage lending since 2010, and then started with just myself, no processor. Started to gain business, hired a processor to help out with documents, things like that, and then I'd probably say in 2019, that's when we started to build a team up a little bit. And then just trying to find the right people for that is, very special because you're handling a lot of, clients' needs, and we want to make sure we deliver. So
Yeah, for sure. You got to make sure have people that can keep their promises and keep their word.
Absolutely. Yep.
Yeah, and then we made a big transition to Synergy One, and so I think a lot of kind of today's episode is going to be diving into some of those products and really the real reason behind that transition and how it can really help home buyers and people just get approved easier.
Yeah.
So yeah, whether if you guys are self-employed, looking for down payment help, shopping for an investment property, or even if you're a real estate agent trying to grow your business, this episode I think is going to have a lot of value for you. So before I think we get into some of the programs that we have listed here, I wanted to ask you this question because I think it came out that 50% of loan officers had left the business this year.
Yeah, I think it actually started over a year ago, and we nationwide have declined for licensed loan officers by 50%. But that just goes to show you how challenging the market is right now. And, you know, I think the most important thing as a loan officer or just anyone in this industry is continuing to try to learn and grow based on changing and challenging markets. Um, you know, when COVID hit in what that was 2000 and I believe 19, so that was 5 years ago. You
Yeah.
know, and anyone and everyone got into the mortgage business too because everyone was looking to refinance to take advantage of those historic low rates. So, anyone and everyone again was getting their loan officer license to
Yeah.
take advantage and, you know, try to get into this industry. But as we know, the COVID era, based on interest rates, was a very short period. If
Yeah.
you really think about it, um, we only had those historic rates for 2 years. That was it. When you go back and you really think about that, that's not a long time at
No,
all.
yeah.
We've actually have been having these higher interest rate market as we are in today longer than what we had the low interest rates during that COVID era. And we're still to this day, as loan officers, every day get some type of concern about where the interest rates are. Because, if you haven't purchased a home or maybe your parents or someone like that have, but they took advantage of those low rates during COVID, they're still thinking that that might be out there, or hey, why are the interest rates so high, right?
Yeah.
But someone like myself and a veteran loan officer have seen all of this already. You had the financial crisis that we saw interest rates spike up. We saw them come back down. We saw an average interest rate probably at 4.875% for a very long time.
Yeah.
And then, COVID hits and they go down to historic lows. I mean, we saw a 1.9% on 15-year terms. I mean, that's
crazy.
It's not real,
Yeah.
So, but in my opinion, those real estate agents that are out there, the loan officers still that are really hustling, that's the survivors right now.
Yeah,
You know,
for sure. And yeah, I guess kind of going off of COVID, just that I guess that mindset. I think that a lot of people have nowadays is that maybe one day the rates will go down again, in which I think saying maybe one day to anything in life really never works out. So
yeah,
um,
we get that again all the time.
yeah,
Will we ever see a 2% or 3% interest rate again? It's possible,
hmm
absolutely. Something major will probably happen again in our
yeah,
time in this industry, and we'll see that possibly again. But someone who purchases a home should not be solely thinking about an interest rate. It's
hmm
about what's the real reason you're purchasing a home,
yeah,
right? It's your family,
yeah,
might be a job move. You want to get out of a specific area. You want to move to a specific area. At the end of the day, the interest rates do affect a mortgage payment. We all know that.
hmm
But if you're solely allowing yourself to focus on an interest rate as a buyer, that's not the way to approach purchasing a home. You
hmm
purchase a home because of those specific needs.
yeah,
If the interest rate or payment is a little too high for your liking, then the next best thing is to find something that you can afford. So maybe it's not the $400,000
yeah,
house, right? Maybe it's the $300,000 house. Maybe it's the $250,000 house. And there's so many different programs right now that are out there that helps interest rates.
yeah,
Tons of negotiations are still happening right
hmm
now. It's still a buyer's market, and people ask, well, what does a buyer's market mean? Well, to me, that means that sellers are willing to help situations to pay closing costs for a buyer, maybe come down slightly on the price a little bit. That is a buyer's market. During COVID, that was not the case. It was completely opposite, which would be a seller's market, right? They didn't have negotiations happening. You
Yeah.
were paying over asking price for those houses, waiving inspections. That's not the way you want to go and purchase a home. You want to be able to take your time, understand the process, of allowing a licensed loan officer to explain the ins and outs of the process, how things work. Whether you purchased a house, you know, 5 years ago, 10 years ago, even 2 years ago, the market is constantly changing. Not only with, what's happening on the actual real estate side with real estate agents and um, home prices and things like that, but in the lending world, there's always something changing, whether it's a guideline change or something like that we have to follow. So just because you purchased a home 2 years ago might be a little bit different in today's world as well.
Yeah, 100%. I think something that you said was really important. Not focusing so much on rate, but focusing on why you want to buy. For your family and for yourself, to invest in yourself. And I think a lot of people get lost in rate, especially with the negativity around it right now, and just whether it be their parents or whatnot that got in during the COVID time. Um,
Yeah, and I can kind of brush up on that a little bit. Look, here at Synergy One, we have so many programs and products out there, whether you're a first-time home buyer or not, to help offset maybe the concern of an interest rate, right? There's so many different opportunities that, myself, my team are explaining and helping a home buyer understand all of their opportunities. So if you're just going online as a buyer, filling out a, random online
mhm.
application, and 2 seconds later you have a pre-approval letter, and that's what you're using to go purchase out there. In my personal opinion, that is the absolute wrong thing to do.
Yeah,
Absolutely.
definitely.
Because number one, no one explained the programs that are out there. Maybe there's 5 different programs that you qualify for. I don't make the decision financially for you,
Yeah.
right? I'm here to guide and let you know what's available.
Mhm.
And if I'm not doing that consistently with each client, I'm not doing my job as a loan officer, right? So when I'm covering payments, interest rates, I'm going over several different programs that client's going to qualify for. And then I'm going to let them know the pros and cons of possibly each one. And then at the end of the day, it's that buyer's decision to go ahead and move forward with whatever fits their needs, right? But there's, again, going back to the whole interest rate, um, yeah, it's concerning in some levels because we've seen rates get close to 8%.
Yeah.
You know, is that high? Yeah, it's pretty high.
Yeah.
And I understand, because historically, in let's say since I've been in the business, that is the highest rate I've ever seen, right?
Mhm.
But again, especially when you're in a buyer's market, you can get a reduced sales price with negotiations.
Yeah.
You can get which is called a temporary interest rate buy down. You can get a permanent interest rate buy down. You can take advantage of grant assistance programs. Here in Louisiana, we have a program called Louisiana Housing Corporation. It's one of the best programs out there for grant assistance here in Louisiana. Gives a very competitive rate, gives you grant assistance. So there's a lot of different ways we could structure loans to make you feel comfortable. And hey, at the end of the day, if you're not comfortable, then maybe you do need to wait to
Mhm.
purchase, right? And that's okay. Maybe this time's not right. Will purchase prices come down some? Probably not,
Yeah.
right? It's probably going to go in the opposite way, especially when interest rates come down, because then you're going to be flipping the market. It's going to be becoming more of a seller's market than a buyer's market. So you just got to weigh out the options is what's most important.
Yeah. So really, kind of now, and I would say the last 2 years or so, since I've kind of been in it, it's been a buyer's market to where they're kind of having the advantage of getting seller concessions, um, having a little bit more negotiating power.
Yeah, yeah.
I know you said in COVID it was a seller's market. What is it kind of like in a normal market? I know there might not be really a normal market.
Well, I've been again through every market that
Yeah,
there is,
yeah,
so but I think on a normal market it's, a seller's still going to be willing to help and negotiate in some cases. And I can't speak nationwide because, you know, I can only speak to the states that I do business in. And that's, usually five or six other states,
yeah,
but I'll just speak completely on Louisiana right now. Yeah, I mean, most sellers are willing to help negotiate certain things, right? And what that means, though, when we do have more buyers out there, that seller might take the better offer all
yeah,
day long, right? If you're going in at 250,000 and we're asking the sellers to help with 5,000 in closing cost, well, if you have another buyer that's out there and says, "Hey, I don't need the closing
yeah.
costs. I'm still going to give you full ask." Well, that seller's probably going to take the other offer
Yeah.
more than likely, right?
Stand no chance.
Right. Now, that's, but again, it all also boils down to having a great loan officer that knows the programs, knows how to help, navigate to what your best interest is, and a great real estate agent that can help negotiate those terms on that contract. So we try to work as a team.
Mhm.
Whenever I, give someone a pre-approval, pre-qualification, me, the real estate agent, and that client are or a team at that point.
Yeah.
We're trying to accomplish that person's goal as the buyer to help them get into that house.
Mhm. And I think that's what I think has given you a lot of success and made you um, as good as you are. Because I kind of put myself, I try to think of myself in their shoes. Like if I was never in the market or in the industry, I wouldn't know half the stuff that I do, and I think it would stress me out a ton not having a good loan officer, a
Yeah.
good agent.
Look, this is probably the largest investment that someone's going to make in their life. Maybe their first house is a $200,000 property. Maybe their second is a
Yeah.
$400,000. But at the end of the day, it's, at some point, this is your largest investment that you're making, right?
Mhm.
So do a lot of loan officers just think that, hey, you know, I don't need to explain everything. This is what I do. Some probably think like that, but at the end of the day, you know, again, whether you purchased 5 homes before, that doesn't mean that you know everything
Yeah.
to what's out there to offer. So that's my job to get in there and find out your needs and goals. Again, could be investment properties that we specialize in,
Mhm.
um, bank statement loans,
Yeah.
the new, not completely new, but the DSCR programs, which is a no income document investment program. I mean, zero income
Yeah.
documents that you need to purchase a home as an investment. I mean, that kind of blows people's minds when I tell them that,
Mhm.
right? But that's a program that's out there,
Yeah.
So there's so many things that we're able to do to help homeowners. But again, this is the largest investment. So, I love helping first time home
Yeah.
buyers because I get to explain everything and, really make them feel comfortable on go and spend 200,000 bucks,
Yeah.
So even though we do this every day, that the buyer does not, right?
Exactly.
So it's important for them to feel comfortable in who they're, working with.
Yeah, for sure. I agree with that. Something that you just said about self-employed borrowers and bank statements. I know we wanted to touch on that because really throughout history they've had one of the toughest times getting approved or they
Still do,
yeah they kind of
so
get taken through the ringer a lot
you're
of
right,
times.
yeah, exactly. And small business owners are one of the industries that help this nation grow.
Yeah.
So why not have specific programs for that person, right? Uh, the whole reason behind the bank statement style programs is because, be honest, a lot of self employed people do not claim a lot of money on their tax returns.
Yeah.
I get it.
Oh yeah.
I have other businesses too.
Oh yeah.
So I understand. But for traditional financing, they're not going by that gross income on the tax returns. They're going by that net income on the tax returns. And you could add back a few things here or there to it, but at the end of the day, it's the net income. Yeah. So if you're writing off everything for traditional financing, there's no route for you.
You don't have no income.
You don't have any income approved. So, which is fine. So that's why right now, especially the bank statement programs, the 1099 programs, these are very important out there. And as a loan officer, if you don't know how to do those types of programs, you're behind. I feel like you're really behind the last 2 years.
Definitely.
We specialize in that, right? So, and we have several programs for it. But as loan officers too, that's a huge thing that I'm always telling my real estate agents or referral partners that, hey, we need to advertise this. You need to get out there and let your clients know what's available.
Yeah.
So just a lot of programs out there for the self-employed clients, and there are opportunities. So if you go somewhere and they say they can't help because you didn't claim enough money on your on your tax returns, that doesn't mean you can't purchase a home.
Yeah.
Let us know. We'll take a look
definitely. At it. Something that comes to mind, the 12 or 24-month bank statements. Can you kind of explain a little bit how that works, and then maybe give us an example?
Yeah,
of one that you've done?
Very simple, to be honest with you.
Mm-hmm.
So if we're going the bank statement route for a self-employed client, the rule of thumb is we're going to either take an average of the last 12 months or 24 months of your bank statement deposits. Okay, so they're going to take an average. So let's say if your average is $10,000 a month in deposits from your business, right? It has to be from your business. Then they're typically going to take a 50% expense ratio factor out of that 10,000, right? So that leaves us with 5,000 a month to use to go and purchase a home. Now, if you said, hey, my CPA can actually write a letter, get more documentation that's showing my expenses are not 50% of that, then we can look into adding more back if the expenses are truly not that, right? Mm-hmm. But it gives someone an outlet to immediately just use your deposits to purchase a home, So again, if you're making, let's say, $300,000 a year in gross income, so you really are making money, right? But you wrote off everything on the tax returns. You should have $300,000 or so in deposits coming in as your 12 months, right? So we're just taking and dividing that by 2, and now you have $150,000 to use to go and purchase a home instead of maybe 0 because you wrote off everything.
Yeah, that sounds a lot better than having to use a tax. Because
that's right.
Whenever if I was self-employed, I would write off as much as I could. I'm trying to not pay that many taxes. Something that I have in my notes, I think that you told me that we have access to around 20 plus broker outlets for kind of flexible approvals.
Yeah, we do. So Synergy, we have in-house through Synergy. We have, we could call it alternative financing. So we have in-house with Synergy as well. And if your specific needs do not fit into those buckets, we have 20 different other broker outlets that we can use to help almost any opportunity to purchase a home, right? So that just means that maybe some of the other broker outlets that are within Synergy, they may have specific guidelines that they're not too much worried about as far as how they set up their programs, right? So in that case, if our in-house alternative financing options are not working, maybe because of a lower credit score or something like that, then I can reach out to one of our broker outlets that allow that lower credit score, and then we could write that loan through them.
Yeah, nice. So a lot of options.
Tons of options.
Yep. Yeah, it's awesome. I know you were talking a little bit about down payment assistance and the grant program. Um, can you go into
Yeah,
a little bit
for
about
sure.
that?
Yeah, so anyone, you may or may not know this, but um, for a first-time home buyer, that just means that you have not been on a title of a home in the past 3 years. That's it. So,
Okay.
that's the definition.
Yeah.
Um, so, with a lot of the grant assistance programs, you truly have to be a first-time home buyer. You just you cannot be on a title of a house in the past 3 years.
Yeah.
So, what that means is you may qualify for, and I'll give an example, which we call LHC, Louisiana Housing Corporation. Just for an example, they'll give you 4% of the sales price to help go towards down payment or closing cost. So, that adds up, right?
Yeah.
So, and you may have the money for the down payment, but you may not have money for your closing cost. And maybe, we're trying to get in with this house. Sellers are not willing to pay closing cost. It's a perfect opportunity, right?
I'll take it all day long.
To take advantage of that. So, and some of these do have prepayment penalties, which is pretty common when you're getting grant assistance, right? Never had any client that said, no, I don't want that, right?
Mm-hmm.
And that typically just means that, hey, if maybe for an example, if you sell or refinance that property within the first 5 years of having it, you just have to make sure that money's paid back that was given to you up front. I think that's pretty fair, right?
Yeah, I agree. And that's really the only way that you have to pay that back, huh?
That's correct.
Yeah. So
now, and again, that's specifically, let's say, to Louisiana Housing Corporation, one of their programs. But there are several others out there. But it's one of those opportunities to really take advantage of that true first-time home buyer grant assistance to help go and help someone purchase a home.
Yeah, I would definitely take advantage of that. I'm not turning down.
Yeah, and
free money.
just to recap on that for a second, that doesn't mean you can't go and buy another property and keep that one as a rental.
Okay.
So you could still keep that property as a rental if you choose to.
Yeah.
Okay, without having a prepayment penalty.
So it's just like if you sell it
or refinance it.
Oh,
right.
That's good. That's awesome. Then.
But if you think about it, if you truly are using those grant funds for the down payment, then that's putting equity in your property right then and there anyway.
Yeah.
So if you have to sell it, you're technically going to have that equity regardless, you know. But it's just one of the guidelines that they have.
Yeah. Instantly getting equity as soon as you walk in the
door.
Correct. It's awesome. I guess this is also kind of on down payment assistance that you had told me that you had helped a buyer purchase a fourplex with 15% down.
Yeah. So
saving them about $35,000.
A lot of money.
Yeah, a lot.
So have an investor client. He was pre-approved with one of the big box mortgage lenders out there, and that solely do traditional financing. Okay. Well, with a true investment purchase, trying to do traditional financing. Okay. So traditional, conventional, that's backed by Fannie and Freddie. Mm-hmm. You have to put 25% down on a fourplex.
Yeah.
Right. Well, we had an outlet with our in-house alternative financing, okay, that allowed him to still do a 30-year fixed rate mortgage on the fourplex with only 15% down. The client saved $35,000 just from that one transaction.
Yeah.
So the way I presented it to the client was, well, now you have $35,000. You're trying to become an investor. Yeah. Now you have $35,000 extra to go purchase your next property immediately.
Yeah, that's awesome.
He was super excited,
That's huge.
And, with those alternative financing options, there's no mortgage insurance either.
Nice.
Okay. So there's no mortgage insurance involved, right, with those programs, even though, you're only putting 15% down.
So I know a lot of people probably aren't going to know what mortgage insurance is.
Correct. So mortgage insurance is really came out. This was probably before I was born, or
Hmm.
maybe a little bit before. But whenever you purchased a home, years and years ago, you had to put 20% down, where the bank felt comfortable lending you that money,
Okay.
right, to purchase a home.
Yeah,
Not everyone has 20% to put down on a property,
I sure don't.
right? So it's
Yeah.
maybe back, in the 60s, a average house price was probably 50 or 60,000.
Yeah.
So yeah, probably some had that money back then for sure. But I would say, fix this real quick. But I would say when the mortgage insurance companies came on the scene, they were supplying security for the banks and now lenders, stating that, hey, the client doesn't have to put 20% down. We're going to back this with mortgage insurance and cover a portion if the client defaults.
Okay.
So for the average consumer, that is looking for traditional financing, things like that, to me, mortgage insurance is not a bad thing at all.
Yeah.
Number one, it goes by credit scores, it goes by loan amounts. There's things that change it,
Hmm.
but for the most part, it's not a crazy expensive,
Yeah.
monthly obligation, and it allows you not to have to put 20% down to purchase a home, right? So to me, I think it's a great thing that those mortgage insurance companies came in and helped bridge that gap to allow more people to purchase homes.
Yeah. I think something you told me at one time was like, the difference between somebody putting like 3.5% down, or trying to put 20% down just to avoid that mortgage insurance. You're putting down $20,000 more dollars just to say $50 a month, something like that.
Correct.
Pretty
Yeah,
much.
that's true. That's
Um,
true. Now, and look, if you have the money and you want to just put 20% down, and that's what your goal is, by
Yeah.
all means, put it down, right?
Yeah.
There's nothing wrong with that. You could put 50% down,
Yeah.
if you feel comfortable. But if you're stretching yourself out to put 20% down, or if you're just trying to save more money, to have that 20% down to avoid, let's just say a 50 or
Yeah.
$75 monthly mortgage insurance fee, what's worth it for you at that point?
Yeah. Yeah. Especially if, trying to put down, if you're putting out your whole savings account for that down payment, it might not be the best idea.
That's right. Yep.
Yeah.
Yeah.
For sure. Something else I wanted to go into. I think you already talked about the 4% grant with no income limits. We went into that, or did you go into the no
Yeah.
income limits
So,
on it?
most of the grant programs do have some type of income limits, right?
Yeah.
Now there are other alternative options that do not, but I would say like the Louisiana Housing Corporation program that we do, it does have income limits, for those, which can go up to around 125,000 a year.
Mhm.
But there's other options too, not through Louisiana Housing Corporation, but other grant assistance programs
Yeah.
that we offer that do not.
Yeah.
So, yeah.
Sure. Well, yeah, if you guys, if you're an investor, or just, looking for down payment assistance, this would be really good for you. And it's not just for first time home buyers, like when we were talking about on the fourplex. It's not just for first time home buyers either. So
No. So, taking advantage of an opportunity to become a investor, or, maybe you own 10 rental properties out there right now and you just trying to build up your portfolio. There's tons of options out there to do it. Some investors like to go, let's say, like a commercial style route. But to my knowledge, there's no 30-year fixed rate mortgages on the commercial side of lending, right?
Mhm.
So, they're going to make you put 20% down. It's going to be on a 5-year or 10-year balloon note with a 20-year, amortization.
yeah.
So, these are opportunities out there to put them on a 30-year fixed rate mortgage, with several different options. So, I'm super excited to continue to grow that side of my business to help investors, business owners, have that opportunity to buy homes
Yeah,
without having to provide maybe the tax returns because of what we talked about earlier.
exactly. Um, do you have any rental properties yourself?
I
You
do.
do?
Yeah. Yeah. So
How,
I mean, I started investing in real estate in 2010. So, you know, really when I got heavy into the mortgage industry, you know, I knew that side of the business, so it
yeah,
kind of came hand in hand for me to, okay, I should also look into investing in rental properties or short-term rentals, things like that. So, it's good to have in your portfolio, just as, you know, additional assets out there because when you do have rental property, someone else is making that mortgage payment for you, right?
exactly.
So, so it's definitely a great opportunity to have those if you're thinking about investing, things like that, and you're trying to save up the 20% or 25% to purchase these investment properties. You don't have to do that. For the most part, as long as you have at least 15% down, then you're going to have opportunities out there to purchase investments.
Yeah, for sure. So do you only have like rentals or any
I
Airbnbs
have
or
both.
do you
Yep,
do?
yep. I have both, and you know, both have their pros and cons with
Yeah.
them. I like the Airbnb because I could stay there when I want.
Yeah.
So, but I have long-term rentals. I have multi-unit family properties as well.
Nice.
So it's just depends on what you're looking to do out there. If you want to become a landlord. Not everybody does, but
Yeah.
in my opinion, still owning a home, as a primary residence, is a great thing to have because it's a true asset that
Hmm.
you can pass down to a child, a grandchild,
Yeah.
things like that. And look, nothing's wrong with renting if that's the
No,
choice of
yeah.
someone wants to rent for the rest of their life. That's their choice, but they're not going to have anything, as far as like a hard asset like a home to pass down to anyone.
Exactly. Because it's something I'm super interested in is investing in real estate and just from everyone that my dad and everyone else here in the office kind of tells me about and houses are always going to appreciate and then so not only you going to be building equity but like you said somebody's paying that mortgage for you and then you're probably going to cash flow a little bit
Yeah,
on it as
absolutely.
well.
And as we know, for the most part, you know, here in Louisiana, we don't see a lot of decrease in house values.
Hmm.
We stay pretty strong through the hard and good times. So in my opinion, if you're looking to invest in real estate, again, primary residence, investments, whatever, the best time is always now because if the housing market continues to grow, like which it always typically does, you're going to pay a little bit more next year for the property,
Yeah.
right? And then if interest rates come down some a little bit there,
Dogfight.
yep, dog fights, you're not going to get
Yeah.
closing costs. You may not get the reduction on the sales price that you may have, may be able to get now. So it's just a lot of different things. But again, you know, I never push anyone to purchase anything. That's not what we do, because the buyers is the one who needs to have that, mentality of, okay, this is the right time for me,
Yeah.
you know, and look at the opportunities that's out there because you may not know. You may have someone else in their ear that did purchase a home during
Yeah.
COVID and they're like, oh man, my note's so low, I have 3% interest rates, things like that. That's not going to be the case today,
Yeah.
right? But we need to figure out again what best fits your needs as far as a payment, right?
Mhm.
So to me, focusing on the payment, what's comfortable for that client is absolutely the most important thing.
I agree. And I think that this is why I think this podcast is going to be so important and provide a lot of value because I think just a lot of the things that we already talked about, a lot of people don't know, and it's hard to, I think, explain that to somebody over the phone. Even if you do, I mean, they're not going to really retain much of it or remember. So
Yeah, look, we, as my team, make ourselves very accessible. So we encourage our clients to ask those questions. Be open minded through this process because there are a lot of moving parts, right?
Mhm.
And you got to have the right person to explain those things.
Yeah.
Because it's a nerve wracking transaction for someone knowing that, hey, I'm buying a house, but it should be exciting too.
Yeah.
That's it's an exciting time. So,
And
we
it's
want to make sure my clients are, excited,
yeah,
happy, communications there.
least
That's what we
stress as
provide.
possible. Sure.
100%. Yep.
And it starts moving quick when you get that purchase agreement in. That's
It
that's the running
does.
thing I've heard. They're like, man, I wasn't expecting it to go this quick.
Average contract's 30 days on paper, right?
Yeah.
And, that is average, I think, because it allows people to pack, get ready for that move, things like that. But on the back end, on the mortgage side, that we're doing in the processing stage, there's a lot of paperwork that's being done on the back end. The appraisals, the title work, the homeowner's insurance policies,
Yeah.
getting all of those documents together. And I think we do a great job of streamlining everything. A lot of things are automated now, which is going to help continue to, allow us as loan officers to get those final approvals a lot faster,
Mhm.
to where, hey, we can close a little bit sooner if you choose to, or if we want to stick to the original close date, it'd be up to all parties, right? But most important thing, in my opinion, right now is, again, communication throughout all parties, streamlining the process, making sure, we're not asking maybe for too much that's not being required out there, and just having the systems in place to, get the job done in a timely manner.
Yeah.
I think that's some of the most important things, and just keeping everyone updated, throughout that process.
For sure. I think that's really important too. And then I know you were talking about approvals. I have in here no overlays, which I have no idea what that means. If you can go into a little bit about that, because I think there was an example that was going. I think Halen was telling me y'all had gotten approved eligible with a 550 FICO score, something similar to
Yeah.
that.
So, here at Synergy, there's no, which we call overlays, because you have a lower credit score, right? So some mortgage companies and banks are going to say, hey, if your credit score is below X, then we have to show that you have 12 months proof of rent. You cannot get any gift funds for a down payment from a family member. You have to have the underwriting findings showing approved eligible. It cannot be a refer. And here, that's not the case, right? So if you have a 550 credit score and you don't rent, but you have the money for the down payment, things like that, then there's no reason that we're not going to be able to help based on the final approval from the underwriters, right? So an overlay is just meaning that, yes, we might have the approval, but if you don't have X, Y, and Z to back that approval up on the client side, then you can't do it at all, right? So with us, that's not the case, So if we got the approval, everything else matches up to get the job done, then that's what we're going to help to.
Good to go.
Yeah.
So we don't have to make them jump through a million different hoops. Kind of
Correct.
similar to the self-employed.
Yeah.
That we'd have to do.
That's right.
Just less hoops to jump through. And
Look, I think everyone should have the opportunity to purchase a home. Does not mean everyone is able to at the moment. Could be a range of different things, right? But if I speak to a client and they're not ready yet because of certain criteria, I'm going to help and guide them and, give them tips to what they could do to get ready, right?
Yeah.
Trust me, we would like to help everyone, but that's unfortunately not the case. And But to me, if someone's applying for a mortgage to own their house, that person's eager to eventually get into something, right? So that's important, for them, for us to help and eventually get someone there.
I agree, and I think that's what a lot of people kind of get wrong about loan officers and people in the industry, because even if you're not ready to buy, like there's so many things that loan officers could do to help, like whether it's building credit or just kind of building your readiness to buy, whether it's a 6 months, a year out.
Yeah.
Um,
Yeah. I mean, I get a lot of, clients say, well, I filled out the application and never heard back from anyone.
yeah,
That's just not a way to do business.
I agree.
Whether I can help a client or not, I'm still going to tell them the answer is either yes or no. But, if it's a no because of, our guidelines
Mhm.
that, maybe the, credit scores, income issues, things like that, then I'm going to at least guide them to what, maybe some things that could be done for the future to help. And at that point, hopefully that buyer respects, that I called them back,
Mhm.
gave them some pointers and tips out there to help, and they'll call me back and we'll do some follow ups, within the next couple of months or so.
Yeah, that's all we can really hope for.
Yeah.
Um, Something else that it's I think new to the transition with synergies, HELOCs, right?
Yes.
Y'all weren't able to do that with the past.
Yeah. So not a lot of true mortgage lenders have that program, but yes, here at Synergy, we do have a home equity line of credit, which we abbreviate HELOC.
Mm-hmm.
So basically, it's just tapping into the equity that you have in your current home, right? So at this moment, giving a perfect example, I have a client, their house is paid for, okay? They're looking to buy a new primary residence, but they're short on funds in their current bank. All of their funds are held up into the property that they currently live in.
Okay.
So they're trying to purchase before they sell, okay, because they don't want to move twice.
Yeah.
Easy solution is the HELOC, is they can tap into that equity immediately,
Mm-hmm.
use that for the down payment on the new house, and now you have those funds. And we have a program, a very automated program that allows someone to have the HELOC and their liquid funds in their bank within 7 to 10 days.
Wow,
It's
that's quick.
I couldn't believe it, honestly,
Yeah,
when I
that
was
is
told
super
this.
quick.
But yep, no title work, no physical appraiser going out there to appraise the house. Everything's automated
Wow, so
through
you
our
don't have to,
system.
you don't have to pay that 500, 700 bucks for an appraiser.
You're saving probably $2,500 between title and appraisals and things
Yeah.
like that. And to do an automated HELOC program to where, client fills out their own, they do everything, they upload their own documents, everything's automated.
Yeah.
And the funds are typically in their account, after approval within 7 to 10 days. So it's very quick and streamlined.
I feel like that's huge. Like,
Yeah.
because especially for the people that I talk to, where their home, for them to buy a new home is contingent on the sale of theirs, and I feel like that builds a lot of roadblocks during the process of them just finding a home.
Well,
And,
another solution that we offer is the Home Buyer Advantage Program. So let's say they don't have enough equity in the property to actually do the HELOC, right, the home
Mhm.
equity line, but they have at least 15% equity in their current property that they're trying to sell. Here at Synergy, we can actually put a contract on that property to remove from the debt to income, because maybe that property was stopping them from, purchasing another property because of their debt to income. They can't support 2 mortgages, right?
yeah,
We have the Home Buyer Advantage Program that eliminates that. Okay. Now that doesn't necessarily, play the same role as a HELOC, but it does allow someone to lift a contingency because of a debt to income issue, right? Now, but let's say, for example, that person has 5 or 10% to put down on the new property, but their overall debt to income doesn't support having two mortgages.
Yeah.
Well, the home buyer advantage allows us to remove that other mortgage out of the debt to income ratios to purchase the new property.
Wow.
Pretty amazing.
Yeah, that's big too.
Yeah, huge.
I don't know how I would ever qualify with having to use
Yeah,
my
so that's,
mortgage.
and a lot of people do not,
Yeah.
right? So as long as they have at least 15% equity in the house that they're trying to sell, then this is a perfect program for them.
Yeah, it's big.
Yeah.
I like that. I think I have one more to go into, which is the jumbo loan, the big dogs.
Yes.
We have a 5% down jumbo loan. Is that rare? Like, what is it historically? Or
Yeah, so what we have available, which is pretty rare. So the official down payment is a minimum of 10% on a jumbo loan. Okay. Um, and we can piggyback that 10% with another in-house HELOC program that we offer to bridge the gap of an additional 5%. So where that person who may just be strapped a little bit for the cash, liquid cash, that kind of bridges the gap to allow that person to only have to put 5% down on the jumbo mortgage, which is huge,
Yeah,
right?
that is
Because
huge.
honestly, most jumbos are 15, 20% down, okay? So even having a 10% down option with a jumbo is pretty rare, but piggybacking it with our in-house home equity line of credit, okay, that's how we get to the 95% loan to value,
Yeah.
which saves someone a lot of money.
Ton of money. Because jumbo loans are over a certain amount. Is it over $1 million?
No, so it's, it ranges in that, mid 700 range, depending, I would say every state's going to be a little bit different, right? But it's going to be in that mid 700 range. So anything really above that is going to be considered that jumbo mortgage, right? So that's a way, for someone purchasing a jumbo not to have to, put a ton of money down if they don't have it.
Yeah, that makes sense. Yeah, I think that's big. I mean, that's a ton of money saved.
Yeah, it adds up,
Yeah.
And you still have, closing costs and things like that. And that's another thing that, people purchasing a home, sometimes don't realize that, not only that you might have a down payment, but you have the closing costs involved as well, right?
Yeah.
And that's why we, if it's possible, we try to negotiate that with the sellers to help in situations. But, you have to be prepared as a home buyer that you have the other cost involved, and that can be a very large range, depends on the purchase prices, programs, and things like that to what that closing cost will be. So one of the jobs that we do as mortgage lenders is making sure they understand, that, hey, if a seller doesn't pay for this is the amount that you're going to be expected to bring to the closing table with down payment and closing cost, right?
Yeah.
So just making sure everyone understands, that there's kind of two costs involved when purchasing a home, down payment and closing cost, and unless you're doing a grant assistance or something that qualifies for 100% financing.
Yeah, that makes sense. Was there anything else that you wanted to bring
No,
up?
this was fun, man. This
I
was
know.
great.
Yeah, there's a ton more things that we could bring up that we'll save for other episodes.
Yeah,
I
but
thought
look,
this was good.
This was great. It's, the market again right now, it can be challenging for a lot of people, whether you're in the business or trying to buy a home, it can be challenging in different ways. So, but, I always say if you don't get out there and try as a home buyer to see what's available, then you might be doing yourself a disservice, and then real estate agents too, all of my top real estate agents, we're on phone calls, weekly, just going over different scenarios. Or if I found a product that I think would suit some of their clients, we're having that conversation. The more I can put out there and have, the product knowledge to those agents is very important too. So
Yeah, going off that, I think one last question I thought of. I know there's not a lot of people my age going to be loan officers right now, but there is a lot of people still trying to become real estate agents. So, is there any advice that you would give to like maybe someone becoming a loan officer or even a real estate agent? Because I think you've done a good job at keeping those relationships with real estate agents.
Oh, absolutely. I mean, I feel like my real estate agents can call me at any point in time, and
Hmm.
we'll talk about anything.
Yeah.
It's just kind of what it is. That's how I build my relationships. And I just anyone getting into the business, it's not easy.
Yeah.
It's just bottom line. It's
Yeah.
not an easy,
For sure.
not an easy career.
Yeah.
Now some people get in as a real estate agent and flourish the first year. That happens.
Mhm.
But I think if you're really getting into this business, one of my biggest suggestions is getting on a team, learning the ropes,
Yeah.
finding out what works, what doesn't, marketing, things like that. Having a good leader that can help, different scenarios. To me, that's probably the most important thing with getting into this business right now is having a good leader,
Yeah.
because we're in one of the most challenging real estate markets, in very long time. So, that would probably be my biggest advice to anyone getting in this business is, join a team.
I agree. If you don't have a good mentor or team, especially if you're new getting in, you don't know what to do. You're gonna get burned quick, I think.
Yeah, yeah. And there's so many things to learn in this business,
Mhm.
and it takes time, whatever industry you're in, but especially as a loan officer, you have to learn all of these programs and guidelines and
Yeah.
all of those types of things and what fits and what to do, what not to do. So, that's why, you know, when building my team, we're always coaching, we're always going
Mhm.
over scenarios, things like that, and that builds, you know, in my opinion, someone's career, but doing it the right way too.
Yeah. So many things you gotta be good at if you want. You gotta be good at adapting. You gotta be good at communicating. You gotta be a little bit good at math, maybe.
Yeah,
Um,
yeah, you wearing a lot of hats for sure in this
yeah.
industry, but I think it's a great industry to be in. But you have to weather the storms when they're there.
Yeah.
You don't get into this business just thinking you're going to help everyone. Because the market sometimes decides on certain things.
Yeah.
But if you have a good foundation, then in my opinion, that's what is going to help it to stay consistent.
I agree. Man, you dropped some good knowledge on
Man, I
us
hope
today.
so. I
That
hope
was
so.
awesome. I appreciate it. Where
Got
can they find you at if they wanted to reach out to you?
Yeah,
Maybe.
absolutely. Like I always tell my clients, my agents, just give me a call.
Hmm.
That's just the absolute easiest. Shoot me a text. I'm always on my phone.
Yeah.
So yeah. So
And I'll include in the description and everything Aaron's contact info. So if you
yeah,
guys
it'd be awesome. Yep.
are
And
interested in that,
that's I always have my phone on me. That's the best communication for me. Um, you know, that way it's always in my pocket, so I
yeah,
can always try to respond as quick as I can. So
for sure.
yep.
Well, all right, I think that wraps it up. If any of you guys, if you're a real estate agent, reach out to us. We'd love to, co-host any events, support open houses, or just kind of strategize around your listings, or even if you just want some more info on the mortgage side, we're here to help. Buyer, investor, we'd love to explore your options. So we'll have it all in the description where you guys can go. But that's it for today, I
Yeah,
think.
awesome. Thank you,
All right.
Isaiah.
No problem. Let's hope that recorded.
That's it.
Okay, yeah.